Why USD rallies so strongly? Hi dear traders, today is Friday, March 22. Let's discuss the charts for the euro and the pound sterling and forecast their further market moves. Both the euro and the pound sterling plunged in the first half of the day following poor manufacturing PMIs. Traders were discouraged by a weak manufacturing PMI in Germany, where the index fell to 41.6. The industrial sector is losing momentum. As a result, the composite PM for the Eurozone also went down. The services sector mitigated the contraction. Still, the composite PMI for the Eurozone remained below 50 points, defying expectations for a rise above 50. Such data indicates a slowdown in business activity that overshadows economic prospects in the euro area. The euro responded with a serious fall to the PMIs. Later on, the market got to know similar PMIs for the US. Business activity proved tip-top economic conditions. Existing home sales in the US were also robust last month. These metrics confirmed the resilience of the US economy despite high interest rates. Jerome Powell dropped some hints on Wednesday about possible rate cuts. However, it's obvious that the Federal Reserve will hardly lower interest rates in the near future, unlike the Bank of England. Curiously, the British regulator put interest rates on hold at the policy meeting yesterday. But the pound sterling tumbled because Governor Inter Bailey said that the economy needs a push. The economy has been bruised by current elevated interest rates. That's why the central bank has to reverse its policy to monetary easing. Recent inflation data showed that the annual inflation rate slacked in February. So the Bank of England updated its timeline and brought forward the first rate cut to July from August. By the way, the first rate cut is also anticipated in July in the US. This scenario is more realistic in the UK. Hence, the sterling responded with a sharp drop. Now let's check the economic calendar for today. The calendar is loaded with economic data. The UK is due to report on its retail sales. They are expected to shrink in February. In turn, this eases inflationary pressure and serves as an argument for the Bank of England to embark on cutting rates cut. Besides, the IFO will release its survey on economic sentiment in Germany. If such indicators are poor again, the euro will be asset to sell, thus entailing a sell-off of other risky assets. Jerome Powell will make his comments tonight. He will hardly say something sensational, so I don't expect a burst of volatility. Policymakers of the Federal Reserve and the ECB will speak at the summit today. No important statistics will be available for the US. Following a slump in the euro and the British pound yesterday, they might have a minor upward correction. We will hardly see a massive sell-off of risky assets. If the bulls don't enter the market in the second half of the day, the euro and sterling will remain under pressure. Let's look at the 1-hour chart of the euro-dollar pair. It's now trading at 1.0867. The nearest support is seen at 1.0826. I reckon that the buyers will be active later today after weak economic data from Germany. A false breakout at support will be a buy signal with a target at 1.0867. If this price surpasses this level, I will aim to hit 1.0903, where I will open short positions, bearing in mind a correction of 30-35 pips. I could also plan short positions at 1.0867 during a false breakout. If there is no activity at 1.0826, the instrument may slide to 1.0800 with the prospects of testing 1.0762. Here I will plan long positions at a dip, bearing in mind the same correction of 30-35 pips. Long positions from 1.0800 and 1.0826 may stand only in the conditions of a false breakout because the bears are still setting the tone. The pound sterling is in a worse situation. Its growth was wrecked on Wednesday. The sterling settled at weekly lows. The bears are striving to grab 1.2636. If the instrument trades below this level, it will be a clear-cut sell signal. The door will be open to 2600 and 1.2559, where I will plan buy positions bearing in mind a corrections of 35-40 pips. If the price settles at 1.2636, it will be a signal to buy, but I doubt this scenario. It will depend on UK retail sales. A false breakout at 1.2600 is more realistic. If the bulls take 26.73 and there is no selling activity there, a breakout with a top to bottom test will provide a buy signal. We could buy with a target at 1.2708 and even 1.2756. So I'm going to plan short positions from 2708 and 1.2756 during a rebound. Good luck and have a nice weekend.